Dear friends, thank you for supporting this channel on Patreon to join our growing family of donors, now 59 patrons strong. And remember, once we reach 100 active patrons, we will start sending out a 1-ounce U.S. Silver Eagle, autographed by your host, Dunnigan Kaiser, to one active supporter each and every month. Thanks for taking a minute to pitch in by going to patreon.com/ReluctantPreppers and pledging your support today. Thanks very much.
Hey Reluctant Preppers, this is showing you just how easy it is to purchase silver without paying any premium over spot price. You just go to sdbullion.com/RP, scroll down and enter the special code to get silver without any premium, and they'll mail it to your mailbox, discreetly packaged. Inside you'll find a beautiful 10-ounce bar of fine silver, and you are able to purchase that and have it and add it to your stack and your collection without paying any premium, and you're supporting Reluctant Preppers along the way. Thanks.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're always glad to have this returning guest, Jerry Robinson, author of Bankruptcy of Our Nation, founder of followthemoney.com, and published author and widely recognized speaker on the topics of economics and their relationship to intentional choices we're making in our lives, is back here with us again on Reluctant Preppers. Hey, Jerry, thanks for joining us again.
Well, it's a pleasure. Great to be here. Thank you so much.
What a difference a quarter makes. As we were ending up 2017 and fourth quarter and the beginning of January, things were just booming. We had you on talking about the bubble of everything 4 months ago. Yeah. And we were looking at just in huge, historical, inflated prices in the stock market, the bond market, the real estate market, the cryptocurrencies. Everything was going up. And you cautioned us that this might not be a natural phenomenon and that there could be volatility ahead, and we should keep our eyes open to 2018. So here we are just past the end of first quarter and into beginning of second quarter of 2018, and many of those things have had dramatic changes. What a lot of our listeners are wondering is this just an ordinary bump in the road, a hiccup in a bull market, and a setback like you usually will see in any market? In fact, some people even made the point that it was eerily unnatural for some period of time how much low volatility and always trending upward so many of the markets were, that this actually is acting more normal. Others are saying, no, this is a major turning point, and it's what we've been talking about, and the bubble is bursting, and get ready, batten down the hatches, and take up your defensive positions and so on. We'd really appreciate it if you could weigh in from your research on what you're seeing, which of those scenarios you think is more justified by the evidence, and then in either case, what prudent people can do to protect themselves from unnecessary risk exposure during these more volatile times. So if you could just kind of take us back to the beginning and let us know whether you think that this big change in first quarter in many markets, what it really means, what's really going on.
All right. Well, first of all, thank you so much for having me back on. I always enjoy coming on your program. And there has been a lot of changes. When we take a look at what's happened in the first quarter of 2018, the market has pulled back. And that's so far really all the evidence that we have points to this is simply a pullback. But what I want to do is I want to kind of expand on that a little bit, is that in our own research of the markets, and just so folks who are listening know, they may not know me, but I'm a stock trader, an economist, as you had pointed out. And I've been doing research in the market for many, many years. And followthemoney.com is a investment trend research firm. And one of the things that we've discovered about the market over time is that it really moves through stages. And there tends to be about 4 different stages within a market. Stage 1 is whenever the market is basically kind of trending sideways and trying to break out into a new uptrend. And then stage 2 is the uptrend. So the market is moving higher in stage 2. And then stage 3 is where it looks just like stage 1, and the fact that suddenly it starts to top out. It starts to get kind of sideways. And typically what you'll see in stage 3 from our research is a lot of volatility. Volatility indicates that there's indecision. And indecision is, of course, what you would expect at the top of an uptrend, is that people decide, gosh, do we keep pushing prices higher, or, is this high enough? And, and of course, the idea of individuals being behind these decisions, we also mustn't discount the fact that there are all kinds of algorithms and high frequency trading going on. Of course, there's a lot of market manipulation, of course, so we're not trying to bring all that up. But aside from that, that's typically what you see. And I think right now you could build the case either way. You could build the case that this is simply a consolidation in the stock market, because we have pulled back to the 200-day moving average on the S&P 500. And that's a really important area. And we're still testing it as we do this broadcast on the 9th of April of 2018. And as we look at the chart, we can see that the S&P 500 is holding at its 200-day moving average. And if you don't know much about investing, really all you need to know is that that's a very psychologically important area, because many money managers and many traders, they see that 200-day moving average line on the chart, and it often dictates their decisions on how to proceed. So if the price falls dramatically below the 200-day moving average on higher than normal volume, then you typically get an exodus out of the market. We really haven't seen that yet. We've seen the market pull back to the 200-day moving average. We've seen it get real volatile there. We see that right now this is kind of a day trader's market, because the market may be up in the morning and then it's down in the afternoon. So, the day traders are the ones really making money here. I've told my students, I've been on the sidelines. We have a lot of trading students around the globe. And I've just told them that in times like these, there's nothing wrong with sitting on your hands. We've been making money on the way up in the uptrend, in that stage 2 uptrend. So the money's been easy, for quite a long time, 2017 especially. When I say the money's been easy, I'm saying that the trend has been straight up. So there really hasn't been a guessing game. So if you've been long this market, you've been making money, and in fact, some would complain that the money has been too easy, thanks to the Fed goosing the markets and creating great returns for investors, but not great returns for savers and many other people who got hosed by the 2008 economic crash. But anyway, long story short, I think you could build a case. You can build the case that either we are at 200-day support and we're getting ready to rebound and continue this uptrend, because if you look at a long-term chart of the stock market, you will see that we are amidst, the largest uptrend, in memory. It's unbelievable. But it could also be breaking down. Everything moves in a cycle. And so when we finally enter stage 3, right, after we finally begin to, and stage 3 is the downtrend. That's where it's the opposite of, stage 3 is where we top. Stage 4 is the downtrend. So when we finally enter stage 4, you had a question, how do you profit from that? How do you make money from that? Or how do you protect yourself maybe instead?
Right.
And there's ways to profit. There's also ways just to shield and protect. And I think if this does turn out to be a breakdown and a move into the stage 4 downtrend of the broader market, then it behooves people to ask themselves, why am I sitting in all of these equities when they may go down for a couple of years or more, and then may not really rebound for some time? So some people are rightfully wondering whether now is the time to be staying in the market, or it's the time to be getting out. Well, that's a question really for their broker. It's so unbelievably important, and I can't stress this enough, is to have a sit down conversation about your finances. So if you have a bunch of money in the market right now and you're concerned about the market, you shouldn't be listening to AM radio or podcasts. You should be sitting down with a financial advisor and finding out, hey, how do I protect this stuff? How do I prevent this from, going down? And some stockbrokers will just leave you in. They'll just say, look, buy and hold, that's what you should do. I get that. I understand that there's many people like that. We don't take that approach. We swing trade, we position trade. There's a time to buy, there's a time to sell. And that's how we approach it. And so there's plenty of great, financial advisors out there who get that, they understand that. We actually have put together a network ourselves. People can go to our website, followthemoney.com/advice. And we have a financial advisor network of guys, guys who get it. I mean, who aren't beholden to Wall Street and always promoting their same propaganda. But yeah, I think that's really the key here is that, it all really depends over the next couple of weeks. We have to monitor and watch this. If this is actually a rebound, if this is actually where we're going to see prices go higher, because we have established a double bottom pattern in the S&P 500, the price level will need to get back to about 2,800 before we would really kind of give an all clear signal. So right now the market is what we would say the uptrend is under pressure. It's not in a downtrend yet. We'll issue a downtrend email alert to all of our members as soon as it happens. And when that happens, you can use all manner of ETFs, inverse ETFs, to profit as the market goes down. If you think that semiconductors, for example, semiconductor stocks or technology stocks are overheated and due for a big crash or a big fall, well, there's an ETF for that. If you think that volatility is going to spike and it's going to get, even higher and higher in the months ahead, there's an ETF for that. So ETFs are wonderful tools and resources allowing us to gain exposure to markets that we maybe wouldn't be able to have gained in the past. And that's the thing. Those are the kinds of things we track for our members. We provide them actionable insights. It's not enough to watch the news and stay paralyzed. I think it's important to see what's happening and take action. Protect what you have, shield what you have. That's the most important part. And then profit where you can. I think everybody knows something special. Everybody has their own niche. Everybody has their own shtick. And so when it comes to investing, they can really apply that knowledge and profit, even on a part-time basis. That's what we teach our folks to do.
When we talk about being in a very uncertain time right now, as opposed to this sort of monotonically increasing, some said unnaturally increasing markets for the previous several years, if people are concerned that they don't want to risk further losses, but they still want to be able to reap further gains, what are some realistic options that they should consider to kind of tread water here until the market makes it clear which way it's going?
You mean in the meantime, before
Yes.
we know?
Mm-hmm.
Well, in the meantime, as far as the market goes, I'll tell you personally, I'm sitting on my hands. I've done a couple of day trades because that's where the money has been. Very rare do I have even time for that, but I actually did that the last couple of days because that's where this market is. I think it's smarter in this kind of environment where it's so unclear what the trend is, it becomes trendless, that you just sit on your hands. There's no reason to go all in or go all out on the market right now, in my opinion. And that's strictly my opinion. But as I look at the market, I think it's probably wise to sit on the sidelines with some cash, be ready either to take advantage of the downtrend. I think that's really what we're talking about, raising up some dry powder, having some cash ready to deploy. If this uptrend begins again, if we see the price of the S&P break out above 2,800, then we're probably going to see more gains. And if that's the case, many people have been missing out on this uptrend. And so that would be a great time to maybe jump into some different stocks or ETFs that have really been doing well in this environment. And then inversely, if the market does break down, well, that dry powder that we are kind of sitting on right now, we could actually deploy that into some bearish strategies like buying an inverse ETF. Don't really want to give out ticker symbols here, but you can certainly just search for like the S&P 500 short ETF. You may not want to go in and short the market and take on the risk of shorting something, which is basically profiting when it goes down. But with an ETF, you can buy an ETF that actually goes up when the market goes down. And I think those are real helpful for hedging. They're really nice tools that you can use. But the stock market isn't the only place. The stock market is one place that we put money to make money. We trade cash for cash flow whenever we can. And we also like other markets. It's not just the stock market. And I think anybody who has tremendous amount of money in the stock market in the audience today, they're probably rightfully nervous, right? So sure. But I think, for most people, it's important to have a nice diversified investment asset mix, that nice asset allocation. So we have money in equities, stocks. We really love global stocks. So we like to also invest in global equities. And then we love real estate. Real estate is fantastic for tax purposes. Affordable housing is something that'll never go away. And so buying bread and butter, 3-bedroom, 2-bathroom homes in nice working class neighborhoods is just you can't really imagine where that would ever backfire. I think as an investment, as long as you buy them cheap and as long as they're affordable and they're in good neighborhoods, it's a really good place in my mind, to have some money. And then, of course, cryptocurrencies, and then your own business. We like to teach people how to actually make money online. There's just so many different things that people can invest in, so many different things that people can do. But I'm a big believer that you should really kind of base those decisions around what you're good at and kind of what you're talented and gifted in. So there's not really a one size fits all approach. I think everybody kind of has their own special kind of investment portfolio they can create based upon their own taste and preferences and skill sets.
You mentioned cryptos in passing, and people have really been noticing. In fact, I want to touch on real estate in a second as well. That we've seen approximately 50% haircut in some of the peak valuations that happened late last year in the crypto space. Is there any new information you have that makes you think we have clear evidence that the cryptos are completely overdone and they're going to get clamped down by the government or banks or anything? Or do you remain of the mind that this is a new chapter in our economic history, and people need to continue to be open to participating in that in some way?
Yeah, no, I certainly don't think that it's going away. I think that many of them will. Some cryptocurrencies will. We've been investing in crypto since 2013. We started with Bitcoin and Ripple, and Ripple was trading for less than a penny at the time. So it's been a wild ride with Ripple. But we've also taken on several other ones, and we really closely research them. When you look at a cryptocurrency, what you're really looking at is kind of like a research and development. That's really what you're doing. I mean, you're buying research and development situation, and a lot of them don't have anything to show. They don't really have much to, but they do have some. They may have some deals with other businesses, with corporate America, and I think that's why it's really important to do your research on cryptos. When we actually do crypto investing, we limit. So if we have 100% of money to invest, if we have 100, if we put it all into a pie chart, we would only take 5%, slice of 5%, and put that into cryptocurrencies. We believe in cryptocurrencies. We believe they're going to be a challenger to the fiat currencies that we have today that are printed at will. But we don't want to risk, everything because it is such a new thing. And I think it's kind of like the .com craze. I mean, Amazon.com survived, right? There'll be some survivors out of the eventual, dramatic breakdown of the crypto market. We've already seen that in early 2018. I think there's more pain ahead. But I think overall, there's going to be some great cryptos that are going to emerge that'll have great uses that people will have a use for, either commercially or individually or whatever the case might be, and that they'll have a value because of that. And so I think staying away from that market is probably a bit too conservative, unless you have some sort of knowledge that I don't. I've been studying the market for about 5 years. I talk to a lot of industry leaders in that space, and to me it seems like a legit place to put a little bit of money, and not a lot, but a little bit of money. And Bitcoin certainly, and any coin that is offered on Coinbase.com is typically the ones that I'll buy. I mean, that's been a really winning strategy. When they put out Litecoin, for example, on Coinbase, had you just bought it in the first week when they put it out, you would have made a mint. When they put Ethereum out on Coinbase, just buy it the first week. Whatever Coinbase puts out, because they're kind of like the Walmart of cryptocurrencies, they create this demand automatically when they place a coin on their website for sale. And so because of that built-in customer base they have and the demand that they create, that's been a really good winner. And Coinbase tends to do a lot of research on the coins before they put them for sale on their own website. So I think it's good. Cryptocurrencies, yes, they're scary. Regulatory crackdowns and things. There's a lot of FUD, around the market, fear, uncertainty, doubt. But there's no doubt about it. One thing you can say about Bitcoin is that if the government comes out and wants to take your Bitcoin, like they wanted to take your gold back in 1933, which they never did, by the way, but they threatened to do it. Nobody ever got fined or put in jail back in 1933 for not turning in their gold. But nevertheless, it was threatened. And but if they tried to do that in 2018 with cryptos, they don't really have any way to do it. I guess you could bury your gold and hide it from the government. But if they really wanted it bad enough, they could confiscate your land and take it. But when it comes to cryptos, the government has no alternative. It has no such alternative. There is no way to get access to the cryptocurrency without the private keys. And so if you refuse to give those up, and they may not even be written down anywhere for that matter. So I think the government rightfully fears cryptocurrencies because it's a finite type of currency that they cannot print, they cannot control. And the fear is, of course, is that eventually people opt out of the U.S. dollar. We really haven't ever had a very good opt-out provision from the dollar, right? And so Bitcoin kind of provides that challenger to the U.S. dollar. And rightfully, Washington doesn't like it. They certainly have been lackadaisical on the topic, considering how threatening this really is. But I think that they will become more and more aggressive. And I think that'll break down more and more cryptocurrencies. But in the long run, I think, long story short here, I think you're going to see a lot of major quality cryptocurrencies survive. And the people who have invested in those will be very, very happy that they did.
In the past, you've been consistently supportive of, as you mentioned, affordable residential real estate in good neighborhoods, that kind of thing. In contrast to that, could you talk to us just briefly about whether you see a coming collapse in commercial real estate? We've heard Danielle DiMartino Booth, a former Fed advisor, talking about between the prospects of mass closures of many brick and mortar chain retail and restaurant and other service companies having to trim down because of really slumping sales and that sort of thing in the face of rising interest rates and unwinding of the Fed's balance sheet and so on. She's saying that we're going to see just a real winter of in commercial real estate. A, do you agree with that? And B, do you think that there's a spillover effect into residential real estate if there are going to be a lot of layoffs coming, that sort of thing?
Yeah, there's been a lot of hedge funds that have been, trying to profit from the collapse in the real estate market, and they're mainly focused, of course, on this commercial real estate that's getting hit by the internet. Of course, malls and things like that. Of course, we're going through an evolution. I think commercial real estate prices are outrageous across the nation. I mean, there's no doubt about it. Prices are overstretched. If you look at residential real estate, I think a lot of the prices are in many cities, outrageous again. And what's interesting is that we haven't seen the commercials online for people to actually tap their home equity. Remember the HELOC commercials we used to get all the time, the home equity line of credit? We really haven't seen a revival of that. But the banks will do it, and that'll be, I think, the tip-off for at least residential real estate. But commercial real estate, no doubt about it. I mean, we think it's overpriced. We still invest in REITs. REITs have actually pulled back quite a bit. There's some really good targeted real estate investment trust REITs. People who don't like to get their hands dirty, but they still want to own real estate and have income from it. Well, you can use REITs. You can buy a real estate investment trust, and you can target any particular commercial real estate or residential real estate market you want to. We love to target the healthcare facility commercial real estate sector with REITs because that's such a money-making and huge demand, industry or sector going forward with the baby boom generation. The healthcare facilities are still being built out.
There's one being built in our neighborhood.
Yeah, well, many of the finest ones that have ever been built are already locked up by companies like Ventas and Welltower, HCP. I mean, these companies have, they have great real estate, and you can own that real estate whenever you buy a share of a REIT. And then, of course, you usually get a healthy dividend right along with it, which kind of makes it a nice income stream as well. But but I think, back to what I was saying about the commercials, I think when we start seeing those kinds of aggressive commercials, when the banks really start, pulling out all the stops to get lenders or to get borrowers in, I think we'll go through the same market. It reminds me of Ecclesiastes, the wise King Solomon, when he said, there is no new thing under the sun. I mean, everything moves in cycles, really does. Doesn't matter if you're talking about the human body and circadian rhythm, the brain waves, the waves in the sea, the Fibonacci, spirals in the galaxy. I mean, everything moves in cycles, and even the Bible, was astute enough to tell us that. And so I think we're going to see another wipeout in real estate. It's just a matter of time.
Jerry, before we let you go, can you remind people one more time where they can find you online and what kind of resources they'll get when they go there?
Yeah, absolutely. Yeah, thank you. Again, our website is followthemoney.com. We have a free podcast we put out there called Follow the Money Weekly. You can just go there and download that. We also put out we've put out a lot of videos and podcasts over the years, lots of great interviews with some great people over the years you can listen to if you're into this kind of topic. But also, we have a free membership and also paid memberships. If you're wanting to say, hey, I want to make more income, or I want to learn more about these ETFs, or I want to learn more about REITs, or any of the things we talked about today. If there's something that you want to learn and you kind of need to be empowered in it, that's what we do. We help people. We coach our students and help them kind of move to a place of financial liberty instead of worrying about what lies ahead. It's important to obviously know the times, to be aware of the times, but then not necessarily to worry, but instead to take action, to plan, just like we prep, just like we have our go bag, just like we have our physical metal on hand. Now, the same way with our finances, we want to be prepared and be thinking and be active and proactive, and not let life just happen to us. Followthemoney.com is where they can learn more about us. And if they want to click on the plans and pricing, they can see all the different options that we offer. But again, thank you so much for having me on. It's always a pleasure to be here. Thank you again.
We've been talking with Jerry Robinson, founder of followthemoney.com. And Jerry, as always, thanks for joining us at Reluctant Preppers.
Oh, my pleasure.